Good morning, it's Jonathan Barrett with this week's Market Buzz. And markets aren't giving us any much of a reprieve. It's certainly quite busy, and that's a good way to be, I guess, because if you're not in the markets, you're not making any money. Furthermore, you're also not losing money. Okay, a few of the headlines to grapple with. The Dow closes on a record high, surging 2.5% on Friday. University of Michigan consumer confidence positive at 57.3. That's up 0.9, another positive number. And there's the third consecutive monthly rise in sentiment, although it has to be considered that it's 20% below the level in January. Year ahead inflation fell sharply by 3.5% from 4%. Long-term inflation edges a little bit higher in the States, which is quite important. I guess there we'll have a little bit to discuss. We'll unpack in this week's buzz. We'll unpack what's happening in the US to see whether it's justified to hold on to our short US equity positions. We'll unpack that using up and coming data this week, because it's going to be quite a lot. Most important ones are retail sales, unemployment, and inflation out on Friday. So we'll do that a little bit later in the program. In China, foreign reserves climbed the most since November 2015, which I thought was quite interesting. A little bit of rotation happening there. And foreign reserves climbed to 3.39 trillion. Now, I think the interesting thing here is that the gold reserves in China are also adding weight to this move in gold. Obviously, the PBA BC are in there buying gold, and that we've seen a 15th month in a row increase in their holdings. Now, the holdings currently sit around 2,306 tonnes. That's way short of where the US is at about 8,100 tonnes. So you can see China doing a major shift, and that has been in play for quite some time. Over the last 5-10 years, I guess, where they've realised that gold is a store of value. That will continue. Also in Australia, RBA increased interest rates last week by 0.25%. That brings the cash rate to 3.85%, and that was on the back of strong inflation data. So the Reserve Bank, I think it's got its work cut out for it, but let's see how it goes further. See whether or not interest rates continue. But I do expect it to be the last one for a little while, unless, of course, that inflation data picks up even more. Okay, now, we've maintained our short position in the S&P and also the local equity markets for some time, and we continually talk about this rhetoric that we still think things are a little bit valued or overvalued. I guess when the Dow reaches a new record high, it gives us time to consolidate our view and try and suggest whether we should be reducing positions, holding positions, or cutting and going long. This week we got a lot of US data out, and US retail sales, non-farm payrolls, and inflation are going to be the key. We take a little bit of a deeper dive in this report. US retail sales, I guess, is a major barometer in terms of where we see the economy is going, and if the retail consumer is confident, then that should give us some confidence generally over the whole economy. Now, we had a very strong November print, and that tells us that the US consumer is quite resilient. Headline retail sales rose by 0.6 in November, so that was quite positive. We also saw a bit of a decline in October, so it's a bit mixed, but we are seeing a little bit more of a rebound in that actual number. When we look at it, when you break it down a little bit further, you can see that it does remain quite busy, but generally a more resilient trend is what we're seeing. And we're seeing growth there year on year about 3.3%. The forecast in that does, however, suggest that it will peel off. When we go through and we look at May or even May quarter, May, June, July, August, September, we actually see that tapering off quite a bit, and we see that 3.3% number actually reducing to around about 2.1%. So we see that resilience starting to erode over time, which I think is a little bit of a concern. Okay. Labour market now. When I look at the labour market in the US, certainly cooling, and we know it's been cooling for some time. Obviously, Trump was really sort of trying to get the right mix there, policy mix for the Fed governor to enable it to weaken rates, lower rates. Just not happening there because of where the new Fed will be. But I guess the non-farm payrolls, they're falling short of expectations. and that gives me a concern. It also suggests that there's a little bit of weakness starting to come down. Also, we're seeing some of the previous data being revised lower as well. October and November payrolls revised down by a combined 76,000 jobs. And that does reinforce our narrative that the labour market, towards the end of last year was quite soft. And I think really when you look at it across 2025, payroll growth was very, very much lower than where we had expected it to be. And that is a bit of concern. So I think that to me as well, although we do think that in the forecast for non-farm payrolls, we'll think they'll remain pretty much stayed, but not really supportive to those good days where we saw good growth, but up around about 50, 60,000 per month. Okay, and now towards the end of the week, we get the inflation number. Okay, that's going to be a big one. See what actually happens. Price pressure continues to moderate, but it certainly remains uneven across all the components. Headline consumer, we expect it to be around about 0.3%, and that'll be was in line with expectations. Let's see what happens for this month's data, and I think if it remains around 2.6, that's pretty good. That's the lowest since around about 2021, but I do get a sense that that if that's contained, it's quite good. We don't want to see a large number. From the forecast, when we look at that, we do get a sense that it's still going to remain relatively weak. So from about 2.7 down to about 2.4 towards the middle of the year and lower is probably where we're starting to see things. So if anything there, in summary, I guess when you look at it, employment growth, in summary, I guess when you look at retail sales, surprising to the upside, quite resilient. Employment growth is clearly slowing, and inflation pressures remain elevated, but we still feel they'll remain soft for a little while. Okay, well that's about it we've got on that. Let's have a look at some of the building momentum, and I think when you can see it, there's the hourly chart there, so let's just click on that and we can play around with it. Quite interesting, good support down here. We've had this for some time. We've had the breach, we got up to that 70, which is a target that we had. We have no positions on at the moment, but I feel that we're going sideways to lower, building momentum for a move eventually higher. At the moment, it's a consolidating phase, so quite happy to stick that out at the moment and not have any positions, but with the view there to go long eventually. Okay, let's have a look at the S&P 500. That is a position that we do have. And as you can see, it's still bumming around there on the top. 7,000 on the top, comes back lower. This is not a market that really wants to push higher. It's a market that remains consolidating. It has been consolidating since mid-December, and I probably expect that to continue. Although one thing to note, the volatility and the swings on a daily basis are picking up quite dramatically. I think more sideways price action, higher end, indicates that we might have a bit of a push to the top side. But given that we're where we're at the moment, it's a lot of resistance. And if it does break to that top, we will review our current strategy, which is short, and probably start to peel off some of those positions. Okay, let's have a look now at the gold and silver markets. Gold holding steady. Today in Asia, we've had a little bit of a lift, and I like this breach, pull back here, a lot of volatility. We're just going sideways for a while. Expect that range trade for some time, in and out around about that 5,000 area, 5,100, 200 on the top side, and the downside around about 4,800. So expect that to continue. On the silver side, pretty similar there as well. A lot of volatility, but I actually like more upside in silver. It had obviously the biggest correction, so some of those fundamentals are still there, so we're quite happy to be long the silver market there, and probably expect it to head back up, not up to that 120 level, but more consolidation back to that 95 is fair, I think. Well, okay, let's stop sharing. That's about it from me. I hope everyone has a great week this week. Happy trading, and we'll talk to you soon. Bye for now.